Nikhil sir, we are not able to hear you.
Yeah, sorry, I was on mute. I'm
Okay.
saying good afternoon everyone and good afternoon Manoj. थोड़ा कुछ ज्यादा ही बोल देते हो मेरे बारे में, थोड़ा प्रेशर क्रिएट होता है मुझे, so keep it light. Yeah, so very rightly said by Manoj. Yes, tax is, it is very sentiment issue. So whenever I am taking these kind of conversation or webinar or a talk, so I always try to add some value on your life, so that you can take something from my side, so that applies to on your portfolio, and you can save something. So that is the ultimate goal each and every time when we talk on the tax matter. So today also, the topic we chose is tax loss harvesting, which is very unique thing and very rare known thing. So very few people about know this technique. So I'm trying to simplify the terms, because it looks like a very jargon sort of thing, like tax loss harvesting. बहुत अजीब सा लगता है, and it is a Western adopted name. So I'll try to simplify it, and I'll try to make sure like that you will add, you will take something and you can add value in your life for this half an hour or 45-minute talk session. So should I share my screen, Manoj?
Yes, sir. You could share the screen now.
May I now?
I'm not able to view the screen as of now.
No, it's showing like host disabled.
Okay, okay. Just make a post. Okay, I've made you the co-host.
Yeah, sure. So I'll share my screen and we'll start with this thing right now. So yes,
Yes, the screen is visible.
screen is
Thank
visible.
you.
Yeah, so we can start. You can take a pause. Now I'll take it forward. So
Thank you.
yes, right now we are sitting on 21st March. बहुत सारी ऐसी चीजें हैं जो लाइक हम पिछले एक साल में देखेंगे तो बहुत सारे उतार चढ़ाव आए हैं, लाइक देयर इज अप्स एंड डाउन्स. तो that up and downs is like in our portfolio as well, that is called profit and loss. Due to this COVID, someone has suffered a huge losses and someone has make a huge profit. So that is part and parcel of the life. But we'll figure it out कि हमने पूरे साल भर में प्रॉफिट के ऊपर काफी बात की है. नाउ वी विल डिस्कस लाइक कि आपके ऐसे कौन से लॉसेस हैं जिसके ऊपर वी कैन डू समथिंग एंड वी कैन टेक सम एडवांटेज. So I'll start with this tax loss harvesting thing. I'm sure like this is looking like alien sort of thing in India, but it is very well known terminology in Western side. They are using it very well to avoid taxation part. So in India also we can use this technique. How I will show you by some case studies, because इसकी definition समझाना is not the purpose. इसका use कैसे कर सकते हैं, that is more important. So my focus will be more on like how you can use this technique. So this technique will be helpful for those who has invested in equity during this 2021. I'm sure all the data available with us during the year, we have seen a lot of new entrants into the market. Like they have opened their demat account and they have done some kind of investment activities or trading activities in equities. So I'm sure this is fruitful for everyone, because most of the person has done this kind of activities during the lockdown period. And also you have earned something, like you realized some profit. I'm sure you are beneficial from this investment activity in this period, like 2021. So you have earned something, like you have earned some profit. So right now we are sitting at 21st March, where you are going to consult with your tax expert or your chartered accountant to know like how much you have to pay taxes as advance tax. So maybe like this technique will reduce your tax, but that depends upon you, your portfolio, and this today's session, like how you will take this forward. So I'll start with a small and very crisp illustration to understand first what is tax loss harvesting and how you can use it. So if you have invested in equity and you have realized profit, then keep tuned with me. So this is a simple case study. For example, a person has done some transaction during the year. A, B, C, three stocks I have taken. Like you invested somewhere around 4 lakhs, you sold it at 3.5 lakhs. Then another stock you invested 5 lakhs, you sold at 8 lakh rupees. And another equity stock is called C. You invested at 6 lakh and you sold it at 6.5 lakhs. So in a total, you invested 15 lakh rupees and you sold at 18 lakh rupees. And this is like the general basic understanding of transaction during the year. So now we have to calculate the gain, and it is very simple mathematical calculation. You need to subtract the investment cost from the sales. So A, B, C, we have the profit and loss value in our hand. That is in A stock, it is 50,000. B stock, it is 3 lakh rupees profit, and C stock, it is 50,000 gain again. So it is very simple mathematical calculation. I'm sure it is well understood by this example. So in total, I'll see there is a profit of 3 lakhs, but individual script, there is a profit of 3 lakhs and 50,000, that is 3 lakh 50,000, and one loss, that is 50,000. So we can all do this calculation and we can say that ये 50,000 का loss, ये 3 लाख का profit, ये 50,000 का फिर से profit, तो ये set off होके मेरा nutshell profit बना 3 लाख, और इसके ऊपर assuming it is a short term capital gain, you started recently and you buy sell this transaction during the year itself, and 15% की rate से the tax is 45,000. And वो सारे लॉजिक आपने अप्लाई कर लिए कि एक स्क्रिप्ट पे प्रॉफिट हुआ, एक स्क्रिप्ट पे लॉस हुआ, तो कंसोलिडेट करके जो भी आ रहा है उसके ऊपर वी हैव टू पे सम टैक्सेस, दैट इज 15% इन शॉर्ट टर्म कैपिटल गेन. So 45,000 is the tax amount, and you are going to pay this for 45,000 before March itself as an advance tax, or after March as a self-assessment tax. But do you really think so? Can we reduce this tax just having some additional information? So this question you need to ask yourself. Yeah, you can reduce some taxation by having some more information. Yes, you have some more information. Like you need to see not only the transaction, you have to see the portfolio as on date. So the portfolio as on date, that equity or stock we sold is ABC. Now I am seeing my portfolio after selling those scripts or stocks. I still have XYZ stock in my portfolio and I've not sold this yet. So that portfolio as on date is X having a investment cost of 5 lakhs and the today's market value is 8 lakhs. Then Y invested is 6 lakh and today's market value again is 8 lakh rupees. Z, it is somewhere around 7 lakh is the investment cost, but today's market value is 5 lakhs. So nutshell, I have a 21 lakh market value portfolio as on date, which I haven't yet redeemed or sold. So isn't it really interesting that there is some realized gain in my portfolio of 3 lakh rupees instead of I have booked a profit of somewhere around 3 lakh rupees. So after booking a profit of 3 lakhs, still I have a unrealized profit in my portfolio of 3 lakh rupees. Still it is a profit, that is also profit. But when I'm looking my equity individually, so there is a X stock have a notional profit of 3 lakhs, Y have a notional profit of somewhere around 2 lakhs, so 5 lakhs in a total. But there is one stock that is Z, there we have a notional loss of 2 lakh rupees. So this is really interesting. I have some notional loss, but I haven't. I'm ignoring it while doing some planning and doing some tax calculation. Why? Because this is not yet redeemed or this is not yet sold. So what we can do? Again, the question is the same. Can we reduce the tax? Not just having additional information, but doing this applying this technique, doing tax loss harvesting technique. So what is this? What is this technique? Let us understand this. It is very simple. Like, there is a profit of 3 lakhs in X and there is a profit of 2 lakhs in Y. That is notional profit. I'll not do anything. That I'll keep as it is. But this Z category stock, this Z stock, which is making me, attracting my things, is there is a notional loss of 2 lakh rupees. And why can I sold it? Can I really sold this stock? Yes. So by applying this tax loss harvesting, I'll book this notional profit into realized notional loss into realized loss. So I sold this unit of 7 lakh invested cost as 5 lakh rupees. So you see my portfolio will reduce to 16 lakhs. My investment cost is now 11 lakh rupees. So by doing this, what I am doing, what is the change is my calculation of gain is, there is one stock is added, by mistakenly it is written D, but it is that Z stock, where 5 lakhs minus 7 lakhs, there is a 2 lakhs unrealized loss converted to realized loss. That's why I am reducing my profit and loss into 1 lakh rupees. So now my profit is 1 lakh and I have to pay tax only 15%, that is 15,000. Earlier it was 45,000. So, but in this technique, my portfolio is reduced to 16 lakhs, which is not the case. I cannot see only one eye with the tax, like I sold this unit just to save tax. So still this tax loss harvesting is not completed when on the immediately you bought this stock on the same price. You are just booking this loss to save your tax, but not to reduce your market value of your portfolio. So अगर आपने इसको 5 लाख रुपए में सेल किया है तो on the same day itself you can buy the stock on the same price, 5 lakh rupees. The market value will be the same 5 lakh rupees. So if you'll see the market value of your entire portfolio, again it will become to 21 lakh rupees. So this is called tax loss harvesting, where you can book your notional loss into actual loss just to reduce your tax liability. Uh, if you have some already realized capital gain, so against that losses you can book your notional losses. Then you can invest into the same stock on the same day to maintain your investment at same market value previously to this technique, previously to booking your notional loss into the actual losses. So it should be done before ending of this financial year, because after this 31st March, new financial year will apply, and we cannot take the benefit in the same financial year. So this is the interesting thing. This is a very unique thing which is rarely known in India as of now, but it is well adopted technology at Western side, where they are viewing and seeing their portfolio at the end of the financial year just to reduce their tax liability, and the same day they are adding the same stock in their portfolio to maintain the market value of the portfolio. So I'm sure, like, this technique is easily explained by this example, but in real life case, the laws of India, that is Income Tax Act, it is not as simple as that portrayed in this example. There are certain things which we need to understand, that I'll explain you later on. But the interesting thing is that by doing this tax loss harvesting, I am saving my tax. So then I realized that why not I can create the tax gain harvesting thing. Is it really possible again? Yes, we can see, like, in the earlier example, there is a realized profit of 3 lakh rupees. Now I have taken a realized loss of 3 lakh rupees. So if I have a realized loss of 3 lakh rupees, so I'm seeing my portfolio, the same portfolio, I'm viewing my portfolio. So the basic things of this harvesting is, I should not see only the transacted thing, like purchase and sell. I have to see after this purchase and sell what is my portfolio looks like. and then I need to identify some script or some stock where I can use this technique, whether tax loss or now I am explaining you the tax gain. So in the same portfolio, I am seeing if I realize capital loss of 3 lakh rupees during the year, now I am seeing like how I can be benefited from that realized capital gain loss. So in the same unit, I have seen there is a profit of notional profit 3 lakhs in first unit, then second 2 lakhs, and third is 3 lakh rupees. Then what should I do? I should do the simple basic thing. I'll book the notional profit into the realized profit, that is that I can get from the first script, that is the X equity stock. I can sell, I can buy on the same day 8 lakh rupees. By this technique, the market value as on date will be the same, like 21 lakh rupees. But what I derive from this tax gain harvesting, I book my 3 lakhs of profit against the realized loss of 3 lakh rupees. So the taxable income or loss will be nil, which may taxed in next financial year if I book this 3 lakh after some times. So if I book this profit, for example, in the first week or first day of the March, then there is some chances that I may not be able to get this 3 lakh ka benefit. So that depends on some technical things that I'll explain you on set off and carry forward of losses section. So it is not like that this tax gain harvesting is only option or only tool to book profit in the same financial year. You can book the profit in next financial year, and you can carry forward the loss for this year. But my point is that there is some technical gain language is there where you may lose some benefit, if you book profit some later date. So for that we need to understand is losses and set of things. So this tax loss harvesting technique is the unique thing which we have discussed along with the tax gain harvesting thing. But you cannot apply or you cannot use this technique unless you know what are the losses available and what is the treatment available in income tax act for those losses. Because if you book your profit or if you book your losses, it has to be set off from each other as per the law. If it is not, then that technique is is not fruitful for you. So to make it clear till end, you need to understand the losses and the set of provision as per income tax act. So now we can see like what are the losses available. So first loss is long term capital loss. That loss, if you hold any equity stock or mutual fund, equity oriented mutual fund, more than 12 months, then it will be considered as a long term capital gain or loss. If your holding period is more than 12 months, you can consider it as a long term. If there is a loss, then loss. If there is a gain, then it is a gain. The same thing, short term capital loss. Short term capital is defined like less than 12 months. So if you hold any script or any equity oriented mutual fund less than 12 months, then it will be considered as a short term. Then you can define like gain and loss by doing the calculation. Then this two interesting thing is also important to understand. Business loss, I mentioned business loss, but I am very, I'm keeping restricted myself to the stock things itself. So if you are doing some transaction in F&O, so you have to show it as a business profit or business loss. That will be treated as a business income. You cannot show is as a capital gain sort of thing. So if you are dealing or if you are doing transaction in F&O, so you have to treat it as a business. So if there is a loss, then it will be business loss. If there is a profit, then business profit. But we are discussing, to take the advantage from the losses. That's why we are discussing the losses and set of things. The last thing is business loss intraday. So if someone is doing transaction like intraday, buying and selling on the same day, then again it is not a investment activity, and then you have to show it as a business. So in those kind of activities, if you incurring some losses, that is called business loss. So that is clear. Like this, all are related to your demat account itself. You are buying and selling long term, short term. F&O and intraday. So all the losses you need to see in an eye of how you can set off, and then the technique of tax loss harvesting. So if you have a knowledge of which loss can be set off against which income, then only you can do that tax loss harvesting thing or the tax gain harvesting things. So now let us understand what is allowable as against each losses. So very simple, like long-term capital loss, if I'm incurring, that is allowed with the same kind of person, that is long-term capital gain. It is very easy answer. But where it is not allowed for the rest of gains, that is short-term capital gain. You cannot set off your long-term capital loss again short-term capital gain, or your business income. Suppose you incur any profit from intraday or any profit from F&O. Here also I have added business income others. For example, if you are a businessman, you have a normal business income, you cannot set off this long-term capital loss against any kind of this gain or income. But from where you can set off against long-term capital gain itself. Uh, One thing I would like to draw one attention here, like long-term capital loss and long-term capital gain. Uh, there earlier there were no taxation involved under section 1038, but once like one of the financial act enable like taxation at the rate 10%, then it is important to understand the taxation of long-term capital gain and the value of the long-term capital loss. Because when it was exempt, we were just ignoring this long-term capital loss, because when you do not have gain taxation, so you can ignore the loss of the same family of the gain. So earlier, long-term capital gain was exempt under particular section 1038. So we were ignoring the loss of long-term capital sort of thing. But when the taxation is started or taxation is imposing on long-term capital gain, then we have to be very cautious about calculating long-term capital loss also. Now let us understand the short-term capital loss. So it is really interesting. Short-term capital loss, you can set off with the same thing, that is short-term capital gain. Also, brother of short-term capital gain, that is long-term capital gain. It means if you have a short-term capital loss, then your scope is wider to set off against two gains, that is long-term and short-term. But still, you are not allowed for set off. You are not allowed to set off for business income, whether it is intraday or F&O or other income. Now this is again very interesting. The scope is now much wider because your risk appetite is wider. You invested in F&O, but you incurred losses. So your scope to set off against gain is wider, and that wider scope is you can set off against long-term capital gain, short-term capital gain, business income, others, as well as F&O. F&O, it is the same kind of thing, like you have a F&O loss and F&O income you can set off. But interesting thing is you have a normal business income. Suppose you are a businessman, you have a normal business income, and you traded in F&O, you incurred some loss. Yes, you can set off both the income, business income normal and business income, business loss of F&O, as well as short-term capital gain and long-term capital gain. So scope is wider. It is not allowed against business income intraday. Like if you are having a profit of intraday and losses of F&O, so these two things cannot be set off against. Then intraday, it is very restricted thing. If you are doing intraday, you can set off against only and only for intraday. You are not allowed to set off against any of the other gain. So that are the scope and that are the thing like which you need to understand. One second, I think there is some. Yeah, sorry, so there was some network issue. So I'm sure like this set off thing is something like technical which you feel difficulties and you feel like this is jargon. So I have something for you to understand in a layman language. So I have drawn some case studies for you, so that we can understand it better and we can correlate what is written in our laws, ethical way of doing tax loss harvesting thing. So let us take one example that is called business loss in F&O. You have a business loss in F&O of 50 lakh rupees, but you have a business profit in your normal ordinary business, that is 75 lakh rupees. And also you have a business loss from your intraday activities, that is 25 lakh rupees. So if you are not seeing the solution, so like a businessman, you may say that you have 75 lakhs profit, but you have a loss in F&O and intraday of 50 and 25. So technically there is no business profit for the year. But income tax will not think like that. There is a certain things we need to see it from the law angle. So what solution provided as per Income Tax Act? That is like, let us understand, business profit, you have 75 lakhs, you have set off business loss of F&O, that is allowable as per my previous slides. So 50 lakhs we can set off, but this 25 lakhs of intraday, it is not allowed. So technically you fall under taxable business profit of 25 lakhs. But um, if you'll see the fund flow wise or the cash flow wise, there is no gain as such, but you will be ended up on a taxable business profit of 25 lakhs, because this intraday loss is not allowed to set off against any kind of income. I'm sure this example clear the fundamental of business loss set off, various kind of business loss set off. Now let us see the another example. So in this example, long-term capital loss is 50 lakh, short-term capital gain is 75 lakhs. So technically, you will see like there is a gain of 25 lakhs only. Fund flow wise, you incurred huge losses, but fortunately or unfortunately, it is tagged as a long term, and you have a short-term capital gain of 75. So in net, you should have 25 lakhs profit, your fund flow wise, normal layman language. But what solution is available as per Income Tax Act is, against the 75 lakhs, I cannot set off long term capital loss. It is not allowed. So, will it make me trouble? Yes, you will end it up paying more tax. Like entire 75 lakhs will be taxable at the rate of 15%. Now, let us see another example. If long term capital gain is 50 lakhs, and short term capital loss is 75 lakhs. Here it is interesting. Loss is short term capital loss. Loss is short term capital loss. Then this loss really helpful for you? Yes, this is really helpful for you. As a layman language, you are ended up at 25 lakhs ka loss. The same thing is provided as per income tax solution also. Your long-term capital gain will be set off against the short-term capital loss of 75. So your taxable long-term gain will be nil, and rest of the capital gain you can carry forward. So the interesting thing to understand is loss, long-term or short-term, which is more beneficial for you, which have more widened scope to set off against income, is short-term capital loss over long-term capital loss. I'm sure this example 2 and example 3 is clear the difference between short-term capital loss benefit and long-term capital loss benefit. So without this knowledge, you cannot apply your tax loss harvesting, because if you are booking a notional loss into real loss and that loss is categorized as a long-term capital loss, you cannot do or you cannot apply this tax loss harvesting against the short-term capital realized profit. So that's why it is more important to understand short-term capital loss and long-term capital loss difference. So it is advisable, if you have a short-term capital loss of sort of thing which is notional, and you have a realized any gain like long-term or short-term capital gain, you should apply this technique right now to save your taxes. And believe me, your market value of invested portfolio will be the same, because you are doing just to save your taxes. It is not like that you are selling at loss. You should buy the same stock on the same day to add your stock in portfolio. So long term, short term, the short term is very important loss. Now let us take one example by mixing up business loss and short term capital loss and long term capital loss to understand the wider scope of business loss as well as the short term and long term capital loss. In this example, I am just merging example one, 2, 3. So business loss, I have, yes, 50 lakhs, but unfortunately, business profit from my other activity is just 25 lakhs. It 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 can be the real scenario where really the normal business is impacted due to this COVID. So that may be the real scenario where you diverted to doing this F&O transaction and you landed up on the loss as well as on their side. So you have a business loss on 50 lakh rupees. You have business profit of 25 lakh rupees. You have business loss on intraday also 25 lakh rupees. But you have a long-term capital loss of 50 lakh rupees. But here that is interesting that you made a superb gain from short-term capital gain 75 lakh rupees. So now let us put it in two way and let us see like how it is beneficial as per Income Tax Act for us to set off each and every losses. So loss will be set off against income. So I'll pick the income. So first I'll pick business profit income. So business profit income is 25 lakh rupees. I will set off my business loss, that is F&O loss, 50 lakh, and this intraday is not allowed. So my net business loss is 25 lakh rupees because business profit is only 25 lakh, but business loss is F&O is 50 lakh. So my net business loss is 25 lakh. Now I'll see the gain in my long term and short term. Yeah, so gain is short term capital gain 75. Now I should worry like I have a long term capital loss that will not be set off against this short term capital gain. So this short term capital law gain is 75 lakh, but long term capital loss is not allowable. But the good news is you have a net business loss of 25 lakh rupees that is available for set off against short term capital gain also. Yes, so business loss scope is much wider than any other loss, considering or restricted to this equity area only. I'm not discussing here the entire set of and carry forward things of each and every head or sources. So with this four losses, this first is business loss, that is F&O or normal business activity. Second is business loss intraday. Third is short-term capital loss. Fourth is long-term capital loss. So business loss from other activity or F&O activity have wider scope than all three. So this business loss of 25 lakh is available for set off against this short-term capital gain of 75 lakh, where long-term capital loss is not available for set off. So in this scenario, I will be landed up on short-term capital loss gain of 50 lakh rupees. Just the help of setting off business loss of 25 lakhs. So this is the case study. Again, there is a lot of complexity like which loss we should first set off. Like in this example, I first set off against the business profit. There is no rule as such defined. We need to check it out like which loss or which profit will give you the maximum benefit, because the tax rate on the gain is different. For example, for in this example, short term capital gain is taxable at the rate of 15%, right? So there are some scenarios where we need to see like which gain is taxable on the higher rate, so that we need to plan accordingly like which loss should be set off against which income which is taxed on the higher rate. So that is the complexity which I'm not going to discuss here, because I would like to keep it very simple. But my point is that if you know the basic understanding of the set of which income can be set off against which losses, or which loss is set off against which income, then you can apply that tax loss harvesting or tax gain harvesting thing. So just to save tax and have more money in hand of you. So the moral of the story is, if you have a short term capital loss or you have any script which you are seeing, like if you realize that loss which will convert it like as a short term capital loss, then it is more beneficial than long term capital loss. Or if you have a business loss like in your normal business or in your F&O transaction, so that loss is very crucial. That loss is very crucial because that loss you can set off against any sort of income, which is short term capital gain or maybe long term capital gain. So this is the takeaway from my side on this thing. I'm sure this will helpful for you to understand. I know there are a lot of technicalities is available. As I told you, we need to see like which gain is taxable on which rate. So we need to identify the sequence of this set off also. But I think for that you have tax expert for that by doing this thing. But tax expert will not jump into your portfolio thing, and they may not advise you on the tax loss harvesting thing. So that technique you should know, and you should reach out to any expert to doing tax loss harvesting thing. I think Manoj, I'm done with uh, the content. Now we can jump on the question and answer side if it is available to you.
Yes, there are a few questions which I've come across. I'll share them with you. Okay. There is one question which has come from Mr. Mehul Thakkar. If you buy and sell on the same day, won't it be considered as an intraday transaction?
Uh, Intraday transaction is when you buy and when you sell. There is no delivery as such. But here we are doing tax loss harvesting thing, where we are seeing that what kind of stock you have available to realize your short term capital loss or long term capital loss. So you are selling your delivered or your holding from your demat account, and then you are buying that script. So that will not fall under the intraday transaction because you have already taken the delivery.
Okay. I hope that answers your question, Mr. Mehul. There is another question which was coming up. If I sell and again invest to take advantage of tax loss investing, I think it is meant by tax loss harvesting. Will it be considered intraday transaction? So will it be considered investment transaction? So can you explain this?
Can you repeat the question again?
Yeah. If I sell and again invest to take advantage of tax loss investing, will it be considered intraday transaction or will it be considered investment transaction? Can you please
First,
explain this?
first you invest and then you sell.
Okay.
No. The question is first we
If I
invest.
sell
If you
and
sell,
again invest.
if you sell then again invest, that will not be a intraday transaction because you are selling the stock which is already taken a delivery. That is already the holding of your portfolio. So you are selling that and you are buying that. So that is not covered intraday activity.
Okay. There is another question which has come up. Intraday is considered only for cash buy and sell or even for derivatives?
Intraday is only cash buy and sell. Okay, so intraday definition is well defined definition as per income tax.
Mhm.
So any transaction where you are not taking delivery, like intraday, what happen? You are entering into transaction and you have to scare off without taking delivery by the end of the day. So that is called intraday transaction. So if you are doing cash buy, so that is not considered as an intraday because you are buying and you have a option to take the delivery and you are taking the delivery.
Okay, great. If there are any more questions, we are more than happy to take them.
I think there is some question over here
Two
also.
participants have raised their hands. Just give me 1 minute. I'll just ask them. Okay, there is one question. So, Mr. John has a question. So, Mr. John, can you go ahead and ask your question, please? Mr. John, you are on mute. In case if you want to speak, I have given you the right to speak. Okay, I am not too sure whether he's
I think
asking.
there is one question from Mr. Uday Tripathi that I
Right,
can read it out here.
right.
Losses under bond or debt mutual fund can be adjusted against equity gain or equity mutual fund. So as I said, like there are a lot of technicalities under this setup, which I explained, to simplify it. But this question, I can, through this question, I can highlight more on this set of rules and
Mhm.
provision. So if you have a losses under bond and debt mutual fund, so debt mutual fund and bond mutual fund, technically they will also end up with a long term or short term capital gain or loss, but their holding period will change. In equity there is a holding period of 12 months, but in bond and debt there is a certain other holding period. So if the hold due as per the holding period, that loss is short term or long term, then the treatment will be the same. We can set off against equity gain or equity mutual fund, but again that loss I have to set off against equity gain or equity mutual fund or not. That answer will depend upon the other gain as well, because equity gain and equity mutual fund, I have the taxation is like that. I have a lakh of rupees investment, a lakh of rupees gain exemption for a year, and then over and above this 1 lakh gain is taxable at the rate of 10%. So, for example, if I have another gain where I may land up on the tax at the rate of 15% or 20%, so first I will adjust this loss against those income, because equity gain, equity mutual fund already having advantage of 1 lakh rupees of exemption, and after that 10% rate, that is very reduced rate. So that sequence will give the answer. But if you do not have any kind of gain, then yes, you can set off of your losses under bond and the debt mutual fund if it is short-term capital gain or long-term capital gain. Thank you, sir. Yeah, Manoj.
As of now, I don't think so. There is any further questions, I guess. So we'll wait for a couple of more minutes in case if you have any questions, you could ask. We'll be more than happy to answer. Otherwise, we could go ahead and conclude the webinar.
Yes, you have some question. I'm sure you also have opened some Demat account during the lockdown period. You also
No,
have
no,
a handsome
absolutely
profit
not.
to also ask.
I missed the bus. I definitely missed the bus.
No,
I
no.
realized it too late that I could
The
have
record
invested.
number of Demat account has been opened during lockdown period when we were
Yes.
work from home.
Yes, yes, yes. People
So
found this as a second source of income, and most of them were really very happy after investing
yes,
five,
Manoj,
six
but
lakh rupees.
why we choose this topic, because ऐसा नहीं होता है कि मैंने सारे स्क्रिप्ट लिए सारे स्क्रिप्ट में प्रॉफिट है. So
G.
usually, what is the mentality and what is the psychology is we realize the profit because we just enter into the market and we have seen the profit, and the profit is like 52%, 75%. So I
Mm-hmm.
realize huge profit during the year, and that is
Mm-hmm.
short-term profit.
Mm-hmm.
Now I am just keeping my loss stock or loss script as it is, hope that it will one day it will turn up into the profit.
Mm-hmm.
But we are missing one part, that after 31st March we have to pay tax on the realized profit. So why
Yes.
not, you can keep the same thing, you can keep the stock for the long term thing, hope that
Right.
it will recover again, but realize that notional loss into profit.
Okay.
That is the simple thing which we will trying to convey to our audience. And
Okay. There is something also.
for the
Mm-hmm.
technicalities like
Mm-hmm.
set off hoga nahi hoga,
Mm-hmm.
you have expert you can ask, but you should share your portfolio to
Mm-hmm.
apply this technique. Don't
Mm-hmm.
do only sale and purchase and the long term and short term capital. आजकल बहुत सारे डीमेट अकाउंट है, वहाँ पे सीधा स्टेटमेंट मिल जाता है लॉन्ग टर्म में शॉर्ट टर्म में. दे आर जस्ट शेयरिंग इट विद चार्टेड अकाउंटेंट एंड वो गेन कैलकुलेट करके दे देते हैं और उस पर आप टैक्स पे कर देते हो.
Mm-hmm.
एक स्टेप आगे जाओ, पोर्टफोलियो देखो कौन कौन से ऐसे स्क्रिप्ट है जो लॉस में है, शॉर्ट टर्म बन सकता है, एक्सपर्ट से बात करो, रियलाइज करो, टैक्स लॉस हार्वेस्टिंग टेक्निक को यूज.
Mm-hmm.
दैट इज अ सिंपल थिंग व्हिच वी आर ट्राइंग टू कन्वे.
Perfect. Perfect. Okay, so I don't think so. There are any further questions. So in that case scenario, we could go ahead and conclude the session. Thank you for providing insights. It was really very informative and short and sweet as well. And really, the usage of the entire subject, as well as the case studies, which, because most of the times what happens, so we tend to speak a lot about the content but not discuss more on the case studies. So by taking these case studies into picture, it is very easy for us to connect with the audience as well. So thank you once again for providing such informative information. And I'm sure, excuse me, I'm sure that I'm sure that a lot of our audience would have taken this information, and I'm sure they'll be using that for their own personal gain as well. So, on behalf of Financial Hospital, behalf of Nikhil sir, I would like to thank each and everyone who has joined in on this lazy Sunday afternoon. And once again, thank you so much, Nikhil sir. And it was always pleasure hosting you out over here.
थैंक्स मनोज, थैंक्स
Thank
लवली ऑडियंस. आपने जैसा मनोज ने बोला, इट्स वेरी डिफिकल्ट टू आस्क ऑडियंस टू कम ऑन संडे जब आपका फैमिली टाइम होता है. बट थैंक्स फॉर कमिंग. आई होप कुछ वैल्यू मैंने आपकी लाइफ में ऐड की होगी. प्लीज एंजॉय.
Definitely, definitely. Thank you so much. Have a nice day. Bye.